Are you a beginner investor, but you don't know where to start? Well, let's try M1 Finance. I think it's an easy brokerage to use as a person and an individual outside of your 401k, outside of your Roth IRA, that you can actually start investing, picking stocks like Nvidia, Tesla, Applied Digital, anything that you want to invest in, and start building a portfolio based on what you want outside of what you're already getting from your traditional payroll. So M1 Finance, and I'm going to kind of give you guys a little rundown of a couple things through this video. And let's talk about the agenda. We're going to go through the long-term investing mechanics, the features included, the costs and fees that might be included in this type of situation, which I know is key for everybody, some pros and cons, and at the end, I'll finish with some Kenny's thoughts to kind of tell you how I would attack this if I was using M1 Finance. Let me use a disclaimer is that, hey guys, this is not financial advice. This is just me giving you my opinion and some insight so that you guys can, go ahead and do your own research and figure out if this is a good fit for you. So as always, I'm Kenny Davis. This is Kenny's Trade Room. Let's tap in. M1 Finance can be an amazing tool for a beginner investor. And there's a couple reasons why. One, this is a great tool for creating long-term growth. So a long-term portfolio that you can manage on your own, and also you can manipulate it based on whatever stocks you see available. Two, automation. So if I say, hey, every Friday I want $50 to be taken out of my bank account and invested into what my portfolio weighted average is, then it'll do that. You don't have to think about it. It does it every time. And you can go in there anytime and change your percentages based on whatever you want. And with that, that kind of leads right into the another important factor. It's fractional share buying. The fact that it does take the $50, and no matter how many shares it could buy, it's going to buy the fractional amount based on that $50. So you don't have to worry about, oh, can I afford 2 shares? No, it doesn't matter. Even if it's 0.001 share. Let's say you want a Berkshire share, then you can only afford $10 in there. It'll buy whatever fractional value of that stock share price is. And that's amazing, right? I think that's a great thing for a beginner investor, so you don't have to worry about how much capital you put in. You can put in every dollar you can spare to build your portfolio at any time you want. Now, two amazing factors is the fact that they have something called rebalancing that's on automation, and also dividend automation for reinvestment. So anytime you get a dividend, it'll automatically reinvest it into the shares if you set up that feature. You could set up to where you want it paid out. Most people do want to reinvest their dividends, and I think that's the smartest way to do it, but it's based on where you're at in your life. So if you're young, auto reinvest it. If you're older and you want to be paid out, utilizing since you have such a big portfolio, you want to use that cash to live your life, and then get it paid out. It'll hold it in cash and you withdraw it at any time. And I think that's important too. So those two are great features as well that M1 Finance has. And I think as a beginner investor, to have some type of way to, hey, it's already set up for you to just click and leave it alone. It'll do it on its own. And also, if you do want to become that intermediate to advanced investor, you can manipulate what's in there to take more control over the capital that's being utilized. So that's also an amazing feature they have. So let's talk about the cost. Now, from a fees and cost perspective, if you look at just the monthly platform fee, they do charge $3 per month only if your portfolio value is less than $10,000. Then you have the commissions. So for commissions, they only charge $0. There's $0 for trades in stocks and ETFs, and that's across the entire platform. If you decide to open an IRA within the platform, they do charge a $3 per month fee. Now, the only other thing that I kind of want to touch on is that if you do open a crypto account within M1 Finance, they charge a 1% on purchases and sales of crypto, because what they do is they house the crypto in a wallet outside of the platform. I think there's some transaction fees due to the fact that it's a third party, so they charge that 1% to probably cover the cost of that trade transaction relationship. So now that we talked about the fees and costs, which I know are key, let's go through everything that we talked about in this video. We talked about the investment mechanics in M1 Finance, the features included. We went through just the fees and costs, and now I'm just going to do a big summary of what the pros and cons are, because I like to be completely transparent. I'm not being sponsored by them, so I just think it's a great mechanism as a beginning investor to just start, building a long-term portfolio by also manipulating how much shares you have and being able to play around with it and become more skilled and advanced as you go along. Or just sit back, put the portfolio together and let it run. But let me start talking. So let's talk about the pros. They have automation and rebalancing. I think it's super important the fact that you can just set up that it'll pull money from your account on whatever day you want, and it'll just invest it right away auto. So it'll be on auto invest, and it also rebalance based on the weight you want. Now, why is rebalancing important? I can talk about that in my thoughts. Second thing is fractional shares. Fractional shares are key to me, and I think that it doesn't matter how much you put in, $10, $15, it'll go ahead and trade based on what it can buy. Long-term discipline. I think this allows you to continuously invest what you can and make sure it's an amount that you don't need back. It's building a savings account and long-term portfolio at the same time because you are able to liquidate it. It's liquid cash at the same time, and you can withdraw it back. So it can be a savings account and an investment account at the same time for you. And then also no trading fees. Now, no trading fees, I should put an asterisk next to it, but no trading fees is no, they're not charging a commission based on every trade that they do. Now, there's a platform fee, but no trading fees. I think that's also a pro. Now, let's just go ahead and scoot over to the cons. Now, for the cons, the first thing I know is they have limited trade windows. They trade at 9:30 or 3 p.m. If you are a swing trader or day trader, this wouldn't work for you because if you're on swing trading, you're trying to hit it at that peak as you're watching the charts, and you want to sell right away sometimes. So if you want to do day or swing trading, I prefer to use other platforms. And then also, there's a limit on the OTC stocks. So small caps, OTCs, you probably won't find a lot of them in M1 Finance, and that's a con for me. So I think that if you are trying to be more advantageous in investing, I could use two things. I would use the brokerage like M1 Finance just to let it go, put my Chipotle burrito into M1 Finance, and I'll use the other one, which is like Robinhood or Thinkorswim for actual trading stocks on a day trade or looking for penny stocks and things like that. So let's transition to something that I call Kenny's Thoughts. Now this segment is going to be new, but it's something where I can kind of give you what my strategy would be based on what we're talking about. So if I had $20,000 and I was using M1 Finance, I would do these things. I would open 3 accounts. So 3 accounts, and it'd be segmented based on how much money I put into each, but there's a purpose for each, right? So one is a long-term growth aggressive account. So half of it's going to be emerging stocks, half is more conservative staple stocks that I think will be around for the next 50 years. And that's like a Berkshire Hathaway. It could be an index fund. It could be NVIDIA, Microsoft, stocks like that, Google's, it could be like that. And then the other side would be Rich Tech Robotics. It could be Rocket Lab, stocks like that, where I think they're the next generation of stocks coming up that could really explode. One that holds the base, the other shows what type of possibilities could be for the future. Then I have 25% of that money will go into dividend stocks because I want to get paid more on some dividends. So I'll find some stocks that have heavy dividend payouts, and I would put 25% into that one. And I'll continuously put money into that so that would increase the amount of money that I'm getting kicked out. So over time, I'm getting a dividend, and I'm also have a emerging stock where the growth could be exponential, but one is giving me payouts, which in the long term will be nice as well because I'm not worried about liquidating any of my stocks to get some type of cash. And then 5% is crypto. I never want to be over leveraged in crypto because we see the volatility that could come, but I do want to have some type of portion of crypto right now because I think that is important for the future. So that would be my strategy on how to utilize M1 Finance. I would just let it sit once I set it and let it fly. I hope you guys enjoyed this video. If you really did, please click the like button, subscribe, share it. I want to hear what your comments are about the information, if you would use M1 Finance or not. I always want feedback on this video, if you liked it or not. Anything's fair value. So I appreciate the support, and I'll see you guys next time.